Let me start with a question that most new entrepreneurs never think to ask until something goes wrong. If your business gets sued, who pays? If your business owes money it cannot repay, who is responsible for that debt? If a customer is injured by your product or unhappy with your service and decides to take legal action, what is at risk? For many small business owners, the answer to all of those questions is the same. Everything. Their personal savings, their home, their car, their personal bank account. Everything they own is on the line because they never set up the right legal structure from the beginning. Today we fix that. Welcome back to the Business Foundation series. This is episode 10, and we are completing phase 3, which has covered startup costs, money management, and today, the legal foundation of your business. If this series has been adding value to your journey, please subscribe and share this episode with a fellow entrepreneur. Legal structure is one of the topics most people avoid until they need it urgently. Do not be that person. By the end of today, you will understand why choosing the right business structure from the beginning protects what you have built and what you own personally. The main types of business structures explained in plain language, what licenses and permits might apply to your type of business, and a step-by-step walkthrough of how business registration actually works. Let us get into it. Before we talk about the different types of structures, I want to make sure you understand why this decision matters. Because for many people, legal registration feels like paperwork they can do later, something to worry about once the business is successful. And that thinking is exactly what leaves them vulnerable. Here is the core concept you need to understand. It is called personal liability. Personal liability means that you, as an individual, are legally responsible for the debts, obligations, and legal claims of your business. If your business owes money and cannot pay, the people owed that money can come after your personal assets to recover it. The alternative to personal liability is something called limited liability. Limited liability means that your personal assets are legally separated from your business. If the business runs into financial or legal trouble, the problem stays in the business. Your personal savings, your home, and your personal accounts are protected. This distinction between unlimited personal liability and limited liability is the single most important thing to understand about business structure. Let me make this real with 2 examples. Example 1. A man sets up a small food importing business. He does not formally register the business or set up any legal structure. He operates informally, importing goods and selling them to local retailers. One shipment arrives and it turns out the product is contaminated. Several retailers receive complaints. A legal claim is made. Because the man has no formal business structure, he has no legal separation between himself and the business. The claim is made against him personally. His personal bank account, his car, and potentially his home are all at risk. Example 2. A woman sets up a similar food importing business. She spends a small amount of time and money registering it as a separate legal entity. The same contamination problem occurs with a shipment. The legal claim is made against the business, not against her personally. Her personal assets are protected. The business deals with the problem. She is financially and personally insulated from the worst of the consequences. Same situation, completely different level of personal exposure. The only difference was the legal structure she chose from the start. Now I want to be clear about something. This is not legal advice, and the specific rules around business structures, liability, and protection vary significantly from country to country. What I am giving you today is a framework for understanding the concepts, so you can have an informed conversation with a local accountant or business registration service when you take the next step. Always get local, specific guidance for your country when it comes to legal registration. The concepts are universal, the specifics are local. There are 4 main types of business structures you will encounter. Each has different implications for liability, taxation, administration, and how the business is perceived by customers, banks, and the government. Let me walk through all 4. Structure 1. Sole trader or sole proprietorship. This is the simplest and most common structure for someone starting out on their own. As a sole trader, you and the business are legally the same person. There is no legal distinction between you and your business. Everything the business earns, you earn. Everything the business owes, you owe. The advantages of this structure are significant. It is usually the easiest and cheapest to set up. There is minimal paperwork. You make all the decisions. You keep all the profits. Tax filing is typically straightforward because business income is simply added to your personal income. The disadvantage is clear. Unlimited personal liability. If the business has problems, you have problems. There is no legal wall between you and the business. This structure makes sense when you are just starting out, when your business activity carries minimal risk of legal claims, and when your personal financial exposure is limited. Many freelancers, consultants, and small service businesses operate as sole traders, especially in the early stages. Structure 2. Partnership. A partnership is similar to a sole trader, except that there are two or more people involved in owning and running the business. Like a sole trader, a standard partnership typically means unlimited personal liability for all partners. There is a more sophisticated version called a limited partnership, where some partners have limited liability and others, the general partners, retain unlimited liability. But in a basic partnership, all partners are personally responsible for the debts and obligations of the business, including debts created by the other partners. This is important. In a partnership, if your partner makes a decision that causes the business to owe money, you may be personally responsible for that debt even though you did not make the decision. This is why partnerships require extremely high levels of trust between partners, and why having a formal, written partnership agreement is absolutely essential before entering any business partnership. A partnership agreement should cover at minimum how profits and losses are shared, what happens if one partner wants to leave, how major decisions are made, and what happens to the business if a partner passes away or becomes incapacitated. Do not enter a business partnership without one. Structure 3. Limited liability company, also known as an LLC, or a private limited company, often written as limited or Pty limited depending on the country. This is the structure that provides the legal separation between you and your business. When you set up a limited liability company, the business becomes a separate legal entity. It can own assets, enter contracts, take on debt, and be sued, all in its own name, separately from you. Your liability as an owner, also called a shareholder or member, depending on the jurisdiction, is limited to the amount you have invested in the business. If you invested $500 to start the business, the most you can lose is $500. Your personal savings, home, and other assets are protected. This structure involves more administrative requirements than a sole trader. In most countries, you will need to file annual returns, maintain basic company records, and comply with company law requirements. There is usually a registration fee and ongoing compliance costs. But for most serious businesses, the protection offered by limited liability is worth the additional administrative burden. And in many countries, banks, larger clients, and government contracts prefer or even require dealing with a registered company rather than an individual sole trader. Structure 4. A cooperative or community interest company. This is a less common structure, typically used when a group of people want to run a business collectively, with profits shared among members or reinvested in the community, rather than distributed to individual shareholders. Examples include worker cooperatives, producer cooperatives, and social enterprises. If you are starting a standard small business, this is likely not the structure for you, but it is worth knowing it exists, particularly if your business has a strong community, social, or collective element. Now, which structure should you choose? Here is a practical guide. If you are starting alone, your business activity carries low risk of legal claims, and you want the simplest possible setup to begin generating revenue. Start as a sole trader. Register formally, keep your records clean, and transition to a limited company as the business grows or as your activity carries more risk. If you are starting with one or more partners, have a written partnership agreement from day one, and seriously consider setting up a limited liability structure from the beginning, precisely because a standard partnership leaves all partners personally exposed. If your business activity carries meaningful risk of legal claims, involves significant financial obligations, or you are dealing with larger clients who expect a formal structure, set up a limited liability company from the start. When in doubt, seek the advice of a local accountant or business advisor. The cost of that advice is small compared to the cost of getting the structure wrong. Registering your business structure is one part of the legal foundation, but depending on what your business does, you may also need specific licenses or permits before you can legally operate. Let me walk through the main categories. Category 1. General business licenses. In many countries and cities, any business operating within a particular area is required to hold a general business operating license or permit from the local government or municipal authority. This is separate from your business registration and is typically renewed annually. The cost is usually modest. The penalty for operating without one can be significant. Category 2. Industry-specific licenses. Many industries have their own regulatory requirements for operating legally. A food business typically needs health and safety certification, food handler certifications, and approval from local health authorities. A financial services business needs authorization from financial regulators. A healthcare business needs medical licensing. A transport or logistics business may need specific transport permits. An alcohol selling business needs a liquor license. A construction company needs contractor certification. The key question to ask for your specific business is, does my industry have a regulatory body that oversees businesses like mine? And what does that body require before I can legally operate? Category 3. Professional certifications. In some professions, you must hold a recognized certification or qualification before you can legally offer your services to clients. Lawyers, doctors, accountants, engineers, architects, electricians, plumbers, and many other professionals fall into this category. If your business is built on a licensed profession, make sure you have and maintain the required certification. Category 4. Import and export licenses. If your business involves importing goods from other countries or exporting goods abroad, there are typically additional regulatory requirements. These vary significantly by country, product type, and destination. If this applies to your business, this is an area where getting proper guidance from a customs broker or trade specialist is particularly important. Category 5. Intellectual property protection. This is not a license to operate, but it is a legal protection you should be aware of. If your business has a name, a logo, a product, or a method of working that is distinctive and valuable, you may want to consider trademarking your brand name, registering a copyright on original creative works, or in some cases, applying for a patent on a unique product or process. These protections are not free and are not always necessary for every business at the start, but understanding that they exist and knowing when to pursue them can protect something genuinely valuable from being copied or claimed by someone else. The honest truth about licenses and permits is that there is no single universal list that applies to every business in every country. The requirements depend entirely on what you do, where you do it, and who regulates your industry. The best approach is to research the specific requirements for your business type in your specific location, speak to a local business advisor or chamber of commerce, and make sure you are compliant before you begin operating, not after. Now let us make this practical. Here is a general step-by-step process for registering a business. The specific steps and the order in which they happen will vary by country, but the overall sequence is broadly similar across most jurisdictions. Step 1. Choose and verify your business name. Your business name is one of your most important assets. Before you start using it, you need to check that it is not already taken by another registered business in your country. Most countries have an online database where you can search existing registered business names. If the name is taken, you cannot register it, or you risk legal challenges later. Your business name should be distinctive, easy to spell and remember, and if possible, reflect what you do or stand for. Avoid names that are too generic, too similar to existing brands, or that are likely to confuse customers. Step 2. Choose your business structure. As we covered in the previous section, decide whether you will register as a sole trader, a partnership, a limited company, or another structure. This decision shapes everything that follows, including your tax obligations, your liability, and your administrative requirements. Step 3. Register with the relevant authority. In most countries, business registration happens through a government body. This might be a company registry, a business registration bureau, a tax authority, or a combination of these. You will typically need to submit a registration form, provide identification documents, pay a registration fee, and in some cases provide additional documents such as a list of directors, shareholders, or partners. For a limited company specifically, you will usually also need to prepare or file basic constitutional documents, known in different countries as articles of incorporation, a memorandum of association, or similar. These documents set out the basic rules for how the company is governed. Step 4. Register for taxes. Once your business is registered, you need to register with the relevant tax authority. This will give you a tax identification number for your business, which you will need for invoicing, filing tax returns, and in some cases for dealing with banks and larger clients. Depending on your country and your revenue level, you may also need to register for value-added tax or goods and services tax. These are taxes collected on sales and passed on to the government. Each country has different thresholds for when registration becomes mandatory, so check the local rules for your jurisdiction. Step 5. Open your business bank account. As we covered in episode 9, having a separate business bank account is essential. Most banks will require your business registration documents to open a business account. This is another reason to register promptly rather than delaying. The account gives your business a formal financial identity, which is required for professional invoicing, accepting payments, and managing your business finances properly. Step 6. Obtain any required licenses or permits. As we covered in the previous section, check what licenses or permits apply to your specific business type and obtain them before you begin operating or as soon as possible after registration. Step 7. Set up basic record keeping. This connects directly to episode 9. Once your business is registered and your bank account is open, set up your tracking system from day one. Your legal registration creates obligations, including the obligation to keep financial records. Starting this from the very beginning means you are building good habits at the same time as you are building the business. Now, I want to address something that many people ask at this point. Do you need to register before you start trading or getting customers? The honest answer is, it depends on your country and your business type. In many places, you can start generating revenue as a sole trader with minimal or no formal registration, and then register formally as the business grows. In other places, operating without registration from day one can carry penalties. What I would encourage you to do is this: start finding customers and generating revenue as early as possible, because that is what validates your business. But also get registered as soon as the business shows genuine signs of working. Do not delay registration indefinitely. The protection and credibility it provides are worth the time and cost involved. The specific timeline will depend on your situation, your country, and your type of business. A conversation with a local accountant or small business advisor, even just one session, can give you a clear, personalized roadmap for what to do and when. That is a wrap on episode 10 and on phase 3 of the Business Foundation series. Phase 3 covered the money and legal foundation of your business, startup costs, money management, and today, legal registration and structure. These are the topics most new entrepreneurs avoid or delay, and they are the same topics that come back to hurt people when they are ignored. You now have a clear understanding of why business structure matters, what the main options are, what licenses and permits might apply, and how to go about registering your business. Here is your homework. Research the specific requirements for registering a business in your country. Find out what structure is most appropriate for your situation, what the process involves, and what licenses or permits your specific type of business requires. If you are unsure, book even a single session with a local accountant or business advisor. The cost of that conversation is small compared to the cost of getting it wrong. If this series has been useful to you, subscribe and leave a comment below. Tell me where you are in your business journey right now. Are you still at the idea stage? Have you already started trading? Are you ready to register? I genuinely want to know, and I read every comment. In episode 11, we begin phase 4, getting your first customers. We are going to talk about something that surprises most people. Your first customer is closer than you think. We will cover how to use your personal network to make your first sale, what to say when you are selling for the first time, and real scripts and examples you can use immediately. That episode is where the business stops being theoretical and starts becoming real. I will see you there. Take care of yourself and take care of that business.